Hi, I'm Lorna Illingsworth, a mortgage advisor for Protection Investment Southampton. Today we're going to talk about what happens at the end of your interest-only mortgage. Interest-only mortgages are attractive because you're only paying the interest, so the payments are lower than a repayment mortgage. But at the end of the mortgage term, the full balance needs to be repaid. So you should have a plan in place to repay this. Typically, this would be from an investment, pension, or sale of the property or other property. A lender will be expecting you to pay off the loan at the end of the term, and hopefully you will be prepared to do so. If you're not, there are options available. A common way to repay the interest-only mortgage is to use the money you've been saving or taking money out your pension. Some people will sell their home instead and use the funds to downsize or move abroad when they retire. But if you haven't got a plan in place and want to stay in your home, you may need to remortgage to pay off the loan. Or you may be able to extend the term of the mortgage or turn all or part of it into a repayment mortgage so that you can reduce the balance. But this will depend on your age, current income, and when you plan to retire. If you're nearing retirement, you may find that you're unable to get a typical mortgage. So you may need to consider retirement mortgages or equity release to repay the mortgage. A retirement interest-only mortgage, often abbreviated to RIO, can be an option for those over 50 who are having difficulty remortgaging because of their age or because they're near retirement. It's just like a standard interest-only mortgage, but the key difference is that a RIO mortgage is typically only repaid when the property is sold. The advantage to a RIO mortgage is the interest doesn't accrue because you're paying it off monthly, and as there's no end date to the mortgage, you don't need to worry about finding a way to pay it off, as it will be repaid when the property is sold. Equity release may be able to help you repay an interest-only mortgage. Equity release refers to a mortgage aimed at those over 55 to release equity from their home. There's either a lifetime mortgage where you retain ownership and the loan and any built-up interest is paid back when the property is sold. Or there's home reversion. This is where you sell part or all of your home to the home reversion provider in return for a lump sum or regular payments. Again, the borrower can stay in the property and the loan will be repaid when the property is sold, normally on death or moving into long-term care. If you've gotten to the end of the term and you have no plan, the first thing you should do is speak to the lender as soon as possible to let them know. They may be able to extend the term to give you time to figure out how you plan to repay the loan. They may also allow you to switch part or all of the loan to repayment. That allows you to start repaying off the balance too. It can be confusing when there's so many options to consider, so it's important to seek expert advice when it comes to interest only, as it can cause a big impact on your finances and your future plans. If you'd like to get in touch with Protection Investment Southampton, call us on 02380 668 407 or visit our website www.pilsouthampton.co.uk.